As a trader, there's a particular thing you need to know and be able to identify at every single time, and that is liquidity pool. In this video, I'm going to show you how to identify areas of liquidity and what you'll be doing while trading those areas. Now, liquidity pool are simply areas where a lot of orders are seated. Remember, liquidity are simply areas with orders. Okay, it could be selling order, it could be a stop loss, it could be a pending order. Okay, any area where orders are seated is liquidity. And guess what? Price are drawn towards those areas, either to fulfill that transaction, either to clear out those placing orders in that area. Okay, smart money comes in, clears them, and then move price in their intended direction. Now, two ways where you can identify liquidity pool are simply in form of what? Areas of what? Support and resistance. Okay, areas of support and resistance. Now let me explain this. You see this region here, for example, these are liquidity pools. Okay, these are areas of liquidity, and the way I see it as a trap. Okay, because smart money knows that a lot of retail traders will be involved when price comes back to this level. They will want to be selling. Okay, that makes it a very high area of what? Liquidity. Okay, likewise on the resistance, the support side. Okay, this is resistance, this is support. Price comes, bounce off, comes back, bounce off, comes back, bounce. So the moment price is here, retail logic says we should buy and stop loss below. Now all these stop losses are what? Liquidity. They are pending orders waiting to be triggered. Okay, when you see things of this nature, your mind should speak to you. Trap. Say trap. Okay, trap, because smart money will come, trigger these stop losses. Okay, not that they know you have your stop loss here, they just understand that most retail logic will be buying here with their stop loss below, so they try to push the price as low as possible to trigger those stops before heading higher. Okay, and what you need to be doing as a smart money trader is learn to enter a trade once liquidity has been taken. Okay, the moment this liquidity is taken now, you can then follow this trade to the upside. When you do that, you will be safe and your stop loss will be at a protective low. More on that maybe in another video. Okay, so one way to know pools of liquidity is your support and resistance. Okay, now why should you know this? The reason is because even if you are trading smart money concept, let's assume this was a break of structure, okay, and we have an order block here. Now some smart money, the reason why you fail, okay, even though you trade smart money in quote, is because you do not understand this pool of liquidity. All other blocks are not tradable. Now, other blocks seated at liquidity pools are risky. Are they going to work? Perhaps, yes, but they are risky. I don't trade them. I will not trade an order block sitting at what? Pool of liquidity. Why? Because I understand the concept of liquidity. Liquidity is what you need to really succeed in this forex business. Okay, even though we have a structure break, okay, and you are anticipating a push down here and then a continuation to the upside, this is a good idea, but due to the fact that the other block is sitting at pools of liquidity, okay, you can, especially when you have these lows lower than this, okay, and we have a bunch of choppy price actions here. buying at this level, you should apply proper risk management, albeit you should wait and observe it again. Do you have any form of point of interest somewhere here? If you do, sacrifice this. Do not trade here. Wait for price to come to clear this liquidity first. Okay. So one way of understanding liquidity pool is to eliminate false order blocks, okay, or false point of interest. Now, another way you can identify liquidity pools are in form of what? Trend lines. Okay. Trend lines. You have market moving on these trend lines here. Okay. Now, all of these are pools of liquidity. Just like every trader, okay, depositing an amount on these areas, okay, into one basket. That basket becomes a pool. Are you with me? You put in $10, I put in $10, everybody put in $10. As time goes on, that $10 that everyone is putting becomes big, becomes a pool of money, okay, that is either one person comes to take it all, or a few people takes it out. And those few people that take that money are simply the smart money. So, pool of liquidity, your first thing you need to do when you are analyzing any chart, first of all, ask yourself, where are the liquidities seated? The moment you can start answering this question, asking yourself this question, and knowing where they are seated on the chart, it will help you avoid some bad trades. Okay? The main thing is to avoid bad trades. Now, most other blocks that are at this pool of liquidity on the trend line, when you are trading them, you have to be very, very careful. Okay? Very careful. You calculate your risks properly, because sometimes, especially if you are not in the, if that order block is not in line with the order flow, you can have a big problem. Okay, this could be an inducement for a bigger, maybe, point of interest. So price can decide to clear all these other blocks that are here, okay, into this particular point of interest before going lower. Okay, I'm going to share with you a trade I took on pounds USD some weeks back. Okay, because as you all know, I've been bearish on pounds USD, and I gave that signal to those in the mentorship group. Okay, on pounds USD. That same day I gave out on Aussie dollar. I also gave on pounds, because that pounds was, to me, has a very high probability of what? Success. So let's see the example in here. On the 4 hours on pounds USD, on the 4 hours, I gave out this, then price hasn't come in here. Well, this was the news that took the price there, and then we have been shorting from here. Now what I want to point out is this. Okay, what I want to point out is easy, as simply these areas here. When I gave out that these are trend lines liquidity, these are pools of liquidity. 1 minute. So this was the setup I sent to them. Okay, I highlighted here as low probability. Okay, the reason why it's low probability is because there are liquidity above. Okay, that's what I said. If you are buying or selling at areas of liquidity, you have to calculate your risk. Okay, know the amount of risk you'll be risking. So in case you are taking a trade there, you should be very careful. Use minimum risk on this, and this, I wrote there, high probability. Why? Because before price would have gotten here, it will have cleared liquidity. Price will have what? Cleared liquidity. into this area, then I can start selling. Now everything here before this liquidity are seated at pools of liquidity. Even this particular point of interest, order block, supply zone, demand zone, whatever it is, are seated at point of liquidity. So that's why I wrote here low risk. I mean low probability. Okay, and does it mean price will get here and then just move? No, sometimes price can move lower from here. Okay, price can move lower from here, but you need to know your kind of risk. So if it moves lower from here, I know I'll be risking lower, less amount, and I'll be getting less out of that trade. But once it pulls to this point, then I'll be getting more out of the trade. So this was the setup I sent to them. They can confirm. I sent this to them, and currently we are in serious profit. Okay, so now back to the explanation head. As you can see, price came blast through our low probability. This was the low probability here. Okay, at first it was it got respected, but when the news came out, the CPI news came out on this particular day, it went up, taking out all these liquidity pools. Okay, those that are having interest to sell from here probably thinking price will go lower from here with their stop loss around here. Price can clear all those liquidity, okay, then tap into our high probability areas, and this was where we started to start shorting the market. And as you can see, the market is currently has given us way over 15 hour trades. Okay, so these are things you need to understand. Okay, like all of these here are liquidity pools. All of these are liquidity pools. You don't need to be, if you go to a lower time frame now, you might be seeing some form of order block in here like this. You might be seeing some order block here. When you engage here, you are at a risk, okay, because that order block is seated at pools of liquidity. You have to be careful. That is why knowing proper risk management and having a proper concept will help you, become a better trader with time. This might not happen overnight because I didn't learn this overnight. It took me years. Okay, I've burnt my fingers several times, but however, I was able to come back, okay, and then understand it. So buying here, if you go to the maybe 15 minutes, you notice that those are not good areas to be buying from. Okay, you can see now just exactly what I'm saying here. Here you can see we have the form of demand zone. Okay, even though you don't have a clear break of structure, but probably in the 15 minutes you might see, and then you highlight these areas where you'll be buying from. It to be a wrong area because it's sitting at pools of liquidity. Price just simply move past through it. Okay, so learning how to avoid some trades will make you a better trader. It's far better you avoid a trader to come in, make an error, and it tells more on your psychology. So another area I want to look at here is because we also, aside from entering here, we try to load up more positions each day. Now looking at this area, these are pools of what? Liquidity. Okay, these are pools of liquidity. For some reason, some retail logic traders will be selling on all of this. Okay, now the smart money trader, you know that the order flow is bearish. Okay, and eventually price will want to clear the liquidity before continuing. Because most times it takes liquidity before continuing in the intended direction. So I was waiting for price to clear all of this liquidity. Now patience is very important. You have to be patient whenever you're trading. You don't need to jump in. Fine, you can enter here, but as long as you know your point of invalidation, it makes sense. But this will affect your psychology. Okay, it's better you allow price come into your area and then engage the trade. So what happened? So one of your plans should be learn to identify pools of liquidity, avoid looking for trades entry at those areas, and you see your trade turning around. Another good example are these are pools of this level here, they are all pools of liquidity. Okay, you have to be careful coming buying in here, even though the trend is against you for a buy, but the moment you notice this, it can help you to avoid buying in that area. Instead, price went lower before going higher. Okay, so if you have any question on liquidity or pools of liquidity or whatever areas you're struggling with, feel free to put in the comment section and I'll be glad to reply with a video. Make sure you like this video, subscribe to this channel, because I noticed a lot of you are watching this without subscribing. Please subscribe and have a beautiful career trading forex. I'll see you in this video on liquidity.